Alright, hi everyone. Welcome to today's pre-market live analysis brought to you by IC Markets. Right, trust you've all had a great weekend, catching up with family and friends and recharging yourselves for a brand new trading week. Right, before we start, please take note of the disclaimer. Right, this is marketing communication and does not contain and should not be construed as containing investment advice or an investment recommendation or an offer of or solicitation for the transactions in financial instruments. Right, also take note of the risk warning that comes with trading forex and CFDs, as they carry a high level of risk to your capital and you should only trade with money you can afford to lose. Alright, hi Nick, great to see you as well. Alright, yep, definitely we'll be covering the dollar index, Bitcoin and gold as well. Right, as usual, we'll start off with the dollar index, work our way down through some of the major currency pairs. We'll touch on Bitcoin, Ethereum, the commodities, gold and oil as well, the indices, and of course any other requests that you may have. Right, so of course, as usual, just like Nick, if you have any other requests for any instruments, please do drop them in the chat box here. Right, so my name is Ketan Rameshchandra. So this webinar series is brought to you in a special partnership between IC Markets and Everest Fortune Group, who have been the finalists for Best FX and Equity Research for the following years, 2019, 2020 and 2021. Alright, so before we dive into the charts and trading view, we're going to take a look at what's up on the economic calendar for this week. There's quite a few things going on. It's labor market week in the US. So we've got the ADP employment report that's going to be released on Wednesday, 5th of February, followed by the BLS employment report, which will give us further insights into the non-farm payrolls and the unemployment rate, and that's going to be out on Friday, 7th of February. In between, we also have a monetary policy statement announcement being sandwiched in between, right? The Bank of England will be releasing its statement on Thursday, the 6th of February. Right, so here's the calendar for this week. Right, so besides being US labor market week alongside with the BOE announcement, we've also got a whole host of other macroeconomic data going to be released this week. Right, we've got core CPI data out of the Euro area on Monday. That's going to be at 10 a.m. GMT time. Take note, all the timings here are listed in GMT time. We also have the OPEC meetings taking place on Monday, 3rd of February. So depending on their news, the statement released, right, we could see higher volatility for crude oil prices on Monday as well. Then we've also got ISM manufacturing PMI that will be released on Monday at 3 p.m. Right, and then we've got labor market data out of New Zealand. We also have ISM services PMI data for the US on Wednesday, Bank of England on Thursday, right? ADP is going to be released at 1:15 p.m. GMT on Wednesday. Thursday will be the focus will be on the Bank of England, and then on Friday it's labor market data of involving Canada and the US as well. Now, taking a look at where the official bank rate sits for the BOE, right? It currently sits at 4.75%, right? So at the previous meeting, which was in December 2024, the Bank of England left its rates on hold at 4.75% in line with expectations, right? As concerns on inflation, consumer inflation, wage growth, and some indicators of inflation expectations had risen, right? So despite the sluggish demand, right, and a weakening labor market, the Bank of England decided to keep things on hold at its meeting on December of last year. Now, for the forecast for this week, right, we are expecting the Bank of England to make a 25 basis points reduction in its official bank rate to bring it down to 4.5%. Right, so take note of that. We're expecting a rate cut by the Bank of England this week, as we've seen inflation data sort of moderate lower in the month of December, right? So if you look at headline CPI, which is the chart on the left, it accelerated from 1.7% in September to as high as 2.6% in November. This is an annualized rate. Now, December's figures moderated slightly lower, right? Edge lower down to 2.5%, while the core edge lower as well, from about I believe 3.5% down to 3.2%. So inflation does seem to be heading in the right direction, getting a little bit closer to the BOE's target of 2%, right? And at the same time, we can also see that the labor market is starting to weaken even further, right? When we look at employment change in the UK, November's figure just pointed to an increase of 36,000 in the 3 months coming to November, right? And you can see since August, the rate of job creation has slowed down significantly, while unemployment rate has edged higher from 4% in August to as high as 4.4% in November. So we can see the labor market is clearly weakening, getting weaker, and is posting softer data month by month. And at the same time, inflation, both headline and core CPI, looks to be moderating lower. So that paves the way for the Bank of England to move ahead with a 25 basis points reduction on Thursday, 6th of February, and the statement is going to be released at 12 p.m. GMT. Now, coming to U.S. labor market, starting off with the ADP employment report, right? So that's the automatic data processing, right? They are a company that tracks the private payrolls in the U.S. So based on December's reading, right, or rather we can see since October, right, job creation as reported by the ADP report has slowed over the last couple of months, right? It was as high as about 186,000 in October, and we can see that in December, only 122,000 workers were added to private payrolls. This was the least amount in 4 months, as well as coming underneath the forecast of 140,000. So you can see here, not only did job creation slow even further for the month of December, it also missed its forecast of 144,000. Now, coming to January's forecast, we can see that the forecast shows a reading of 149,000, a slight rebound in job creation as well, but at the same time, we can see that it sits well below the 12-month average of 152,000, right? So although job creation looks set to rebound in January, it's still coming in below its 12-month average of 152,000. So if we do see another miss, right? Remember December saw a miss in the ADP figures. So should January's figures miss as well, miss estimates once more, we could see demand for the dollar taper off on Wednesday. Right, so that's at 1:15 p.m. GMT time, Wednesday, 5th of February. And finally, coming to the BLS employment report. So that's the Bureau of Labor Statistics that will release its report on the non-farm payrolls and the unemployment rate. So the chart on the left is the unemployment rate for the US, and on the right we have the non-farm payrolls job growth. Now we can see here October was a very weak month, right? I believe it was only now, I think about 36,000 jobs that were added in October, but November and December saw a strong rebound, especially in December we saw 256,000 jobs being added to the US economy. So take note, the non-farm payrolls comprises of the private sector and the government sector, right? Whereas the ADP employment report only tracks job creation for the private sector. So that's the difference between these two reports, right? Especially in terms of employment change on a monthly basis. Okay, so December we saw a strong rebound in job creation, or the second month of stronger rebound, right, where November's and December's figures came in higher than the 12-month average of 186,000, right? So you can see here December saw 256,000 jobs being added to the economy in December, which was the highest reading in 9 months, as well as meeting the market forecast of 160,000. However, take note that figures for October and November, right, were revised slightly lower as well, combining in a downward revision of 8,000. Okay, and when we look at the forecast for January, we can see the unemployment rate remaining unchanged at 4.1%, while we are expected to see 154,000 jobs being added to the economy in January. So you can see here, right, January's figures are expected to slow from December, and not only is it going to be coming in at a slower rate than the previous 2 months, it is also going to be lower than the 12-month average of 186,000. So take note, right, any miss in non-farm payrolls is going to create a much higher volatility for markets, right, especially for the dollar, right, and we could see a strong sell-off take place, right? But at the same time, right, since this is a relatively low estimate of 154,000, and if job creation comes in strong once more, right, for the third consecutive month, right, we could see a surprise to the upside as well. So do watch out for that, right? As you can see, job growth has been quite unpredictable over the last few months, right, with several instances of non-farm payrolls missing its respective estimates, while at the same time we can see the last couple of months has seen a strong rebound as well. Now let's see if this trend is going to continue for the month of January. Alright, okay, so with that, let's head on over to the charts and trading view, and begin the analysis on the dollar index, of course, right? So here we are on the dollar index, and I'm on the daily time frame. So the dollar index stabilized at around 107.50, right, in the final, at the beginning of the final week of January, and it staged a pretty nice rebound as well. We can see here as well on Thursday, 30th of Jan, the dollar index bouncing off the pivot, which is 107.49, and looks to be making a bullish continuation towards the first resistance, which is at 109.64. Alright, hi Jamilu, good to see you as well. Right, so the pivot, right, let's begin with the pivot. The pivot at 107.49 is actually now a nice overlap level. Previously, this level functioned as a swing high resistance here in November of 2024, and once the bullish breakout took place on 18th of December, this level can then proceed to function as a pullback support, which it did quite nicely on 24th of Jan, and then again on 28th of Jan as well. You can see here, again, 24th of Jan and the 27th of Jan as well. Right, so you can see this creates a pretty decent overlap. Of course, we can see the wick here on Monday, 27th of Jan, dropping as low, dipping just under 107. Nevertheless, you can see that this level does can function as a pretty decent overlap, especially with last Thursday's rebound of this level. So the pivot at 107.49 is actually a nice overlap support, where we've seen the dollar index make a nice rebound last Thursday, which is this candle here, 30th of Jan, and it looks to be making a nice bullish bounce, rising up towards the first resistance. The first resistance is quite clear to see as well. It's a swing high resistance that was formed in the second week of January, right, rising as high as 110.17 on Monday, 13th of January. Now, in addition to it being a swing high resistance, it's also accompanied by a Fibonacci projection at 61.8%. How do we find this projection? Well, we started it from here, point 1, starting on 6th of December, going up to point 2, which is a swing high on the 13th of Jan, and ending at point 3, which is the swing low on the 27th of Jan. So you can see here the 61.8% projection sits pretty close to the swing high resistance, so that's how the first resistance has been identified. Now, beyond the overlap support, which is the pivot, right, I see another pullback level at 106.47. Right, so we see this level here previously functioning as resistance, and then once the breakout takes place, this level is likely to function as a pullback support, and it's also accompanied by a Fibonacci retracement at 38.2%. Now, we found this retracement starting from this swing low here on 27th of September, going up to the swing high on the 13th of Jan, right? So that's how we found this 38.2% retracement. And of course, at the same time, we can continue to see the dollar index trading above the green Ichimoku cloud, right, which highlights the ongoing bullish momentum. And we can also see that the combination of the Ichimoku cloud and the overlaps support at 107.49 combined to form a nice level where the dollar index rebounded on Thursday, 30th of Jan, and also on Friday, right? On Friday, late Friday trading, the White House reiterated Donald Trump's plan to impose tariffs on Canada and Mexico, right, and which triggered a strong demand for the dollar as we wrapped up Friday. So I believe the statement was released at around 1800 hours or 6 p.m. GMT time on Friday, and this caused a late surge in the dollar index, rising as high as 108.56, right, before finally closing at around 108.50, right? So strong demand for the dollar as Friday wrapped up due to the announcement by the White House that Donald Trump is all set to impose tariffs on Canada and Mexico over the weekend, which he has implemented. So hence we saw the dollar demand for the dollar return strongly towards the end of Friday, and it looks like this bullish continuation is likely to extend further as the new trading week begins. All right. Okay. So we've covered the dollar index. Let's work our way through some of the major currency pairs before moving over to Bitcoin and Ethereum. Of course, then we'll touch on the commodities, gold, spot gold, and WTI oil as well. Alright, since we've got the Bank of England coming up on Thursday. Let's take a look at where the key technical levels for this currency pair. Now looking at it on the daily time frame, we can see that cable, right, this currency pair, the British pound US dollar, is also known as the cable, continues to trade underneath the red Ichimoku cloud, highlighting the ongoing bearish momentum. And at the same time, right, we can see it's making a series of lower highs and lower lows. There might be even a nice bearish channel that we can identify. So let's try and see if there's one that we can identify. Right, starting from this swing high here on 26th of September of last year. And yep, there is a pretty decent bearish channel that we can identify as well. Right, let me just set this to the bearish channel. And just make it a little bit more visible. Right, so you can see here, right, a few touches, a couple of touches here on the upper trend line of the bearish channel, and also a few touches on the lower trend line as well, creating a pretty decent downward channel here. And at the same time, so we can see that cable continues to trade within this bearish channel, and at the same time underneath the red Ichimoku cloud, highlighting the ongoing bearish momentum. Now last week, right, we can see cable reversing off the pivot, which is at 1.2493. The pivot is actually a pullback resistance, or rather it's more of an overlap resistance here, right? So we can see here previously cable finding support at 1.2493 a couple of times, right? First taking place here on Friday 22nd of November. The second time it found support was Friday the 20th of December. This was a pretty decent multi-swing low support, almost like a multi-swing low support, which finally gave way on 2nd of Jan before this area functioned as resistance once more, creating a pretty decent overlap resistance, which the cable once again stalled last Monday 27th of January before heading lower. So it's made a bearish reversal of the pivot, and the downward momentum is likely to continue as well. Remember, right, with demand for the dollar picking up towards the end of Friday, right, due to the announcements of tariffs that would be implemented on Mexico and Canada, right, that has caused the dollar index to surge, and that in turn would mean currency pairs like the euro, cable, Aussie and Kiwi have all reversed towards the end of last week and are likely to continue its downward momentum towards the first support, right? So cable has made a bearish reversal of its overlap resistance at 1.2493, which has been identified as the pivot. This overlap resistance is also accompanied by a Fibonacci retracement at 61.8%. Now this retracement level was found starting from this swing high here on 6th of December, going down to the swing low on the 14th of Jan, right? That's how we found the 61.8% retracement. Now the next the first support for cable, right, it looks to be this swing low here. There's a very big swing that's being formed here from 13th of Jan till 20th of Jan. So a period of week, the cable was consolidating around 1.2660, right, before reversing to make a pretty strong retracement to the upside. So this is where the first resistance has been identified. That's at 1.2162, which is a significant swing low that has taken place in the second week of January. Now beyond the pivot, right, remember the pivot is an overlap resistance. Beyond the pivot, the next resistance comes in at 1.2770, which is a swing high resistance, right? This is a swing high resistance that was formed on 9th of December, and at the same time the swing high is also accompanied by a Fibonacci retracement at 50%. So this retracement at 50% was found starting from this swing high here. Oops, oh hang on, that's the bearish channel, right? The swing highs began from here, right? This swing high on 26th of September, going down to the swing low on Monday 13th of Jan. So that's how we found the 50% retracement, which aligns very well with the swing high resistance that took place on 11th of December, and that's how we've identified the first resistance. Right, okay, so we've covered dollar index, pound, the pound as well, cable. Let's take a look at Aussie, right? Oh, maybe let's take a look at dollar yen. Sorry, let's take a look at dollar yen. And we can see here over the last couple of weeks, right? Let's just take a quick look on a weekly basis. We can see over the last 3 weeks, the yen, apologies, the yen has appreciated since the second week of January, right, when the yen appreciates or strengthens. That's going to cause the currency pair dollar yen to move lower, right? So that's what has happened over the last 3 weeks. The yen has strengthened, as we saw the Bank of Japan hike its key policy rate last week, right? Or rather, 2 weeks ago, we saw the Bank of Japan raised its key policy rate 2 weeks ago, right, bringing it up to about 0.5%, and that has strengthened the yen over the last over the last 3 weeks. However, right, we saw demand for the dollar pick up towards the end of last week, Thursday and Friday, and that is why we can see the dollar yen has had stabilized around 154.25 and looks to have made a nice rebound here. So when I look at this level at around 154, right, this is actually a nice overlap level that's accompanied by not one but two Fibonacci retracements. Now let's start with the overlap first, and we can see that this overlap right, this is a pretty decent overlap level, right? We can see, right, resistance here being formed on Wednesday 30th of October. We also see support being formed here on 19th of November. Then we see support once more being formed here. Oops, where's my brush? Okay, oops, sorry. And we see support once more in mid-December, and finally we can argue as well over here since Monday 27th of Jan, the dollar yen has managed to stabilize just above the overlap support at 153.39. As I mentioned, this overlap support is also accompanied by not one but two Fibonacci retracements. The 23.6% retracement was found by running a retracement from this swing low, right, from this swing low here on 16th of September, going up to the swing high on Friday 10th of January. And the 50% retracement was found by running from this swing low here on 3rd of December, and of course ending at the same swing high, which was on 10th of Jan, right? So we can see we have an overlap level, which is the pivot. We have Fibonacci retracements at 23 and 50%, and at the same time we can see that the green Ichimoku cloud has functioned as an area of support as well, right? So we can see about four factors, right? Four factors identifying a strong support zone for the dollar yen, right? And we've seen it stabilize at this level in this zone last week, and it looks to be making a nice rebound of this level, right? So I expect this bullish reversal to continue as markets begin trading this week. So once again, right, we have four factors identifying a strong support level for the dollar yen, right? We have the overlap level, which is the pivot. We have two Fibonacci retracements at 23 and 50%, and of course we have the green Ichimoku cloud itself. Now, as it makes this bullish reversal or rebound, right, where I see resistance for dollar yen is at this overlap level at 158.28. Now we can see here, this level previously functioned as a pretty significant swing high resistance in April of 2024, right? And we see some slight resistance as well for a couple of days here in mid-June, some consolidation here as well in 15th July, and of course we see a very significant resistance barrier that has been in place since 19th of December. So this creates a very strong overlap at 158.28, which we have identified as the first resistance for the dollar yen. Now, this first resistance might, let's see if there's a Fibonacci extension that we can use to find this extension level. We're going to be running a retracement from this swing high on 15th of November, going down to this swing low here on the 3rd of December, right? Key extension levels sit at 127 and 161%, and we can see, yep, the 127% extension is pretty much exactly where the dollar yen stalled on Friday 10th of January before making a very strong bearish reversal. And we can also see the extension at 161% also aligns pretty well with this significant swing high resistance that has taken place in the first week of July. So take note, should we see the dollar yen rise even further, right? If it makes a bullish break above the first resistance, right, maybe in a couple of weeks, let's see how strong the dollar is, right? So if this resistance does not hold, the next resistance for the dollar yen is at 161.72. It's a swing high resistance that has taken place in the first week of July 2024 and is also accompanied by Fibonacci extension at 161%. And also, of course, we can see the 127% extension accompanying the overlap resistance at 158.28. Now, beyond now these are all the resistance levels. Now, beyond the overlap, which is the pivot, right, I see another nice overlap level at 149.27, right? Once again, I see a nice resistance being formed here, a nice swing high resistance being formed in mid-August of last year, right? I see consolidation around this level from October, or for 3 weeks in October. Then we see a very nice swing low being formed here in the first week of December. So this creates a nice overlap level, which we have identified as the first support, and is also accompanied by Fibonacci retracement at 50%. Remember, this retracement was found starting from this swing low here on 16th of September and ending with the swing high on 10th of Jan. Right, so we've seen the dollar yen stabilize in the strong support zone at around 154 and looks to have made a very nice rebound last Friday, and I think this bullish continuation is likely to extend further. And of course, because take note, I would also like to highlight this descending trend line. Right, there's a pretty decent descending trend line here that's been in place since 10th of January, right? So to get further conviction that this bullish rebound is going to extend further or gain further traction, I would really like to see this descending trend line get taken out cleanly, and that would give us further conviction that dollar yen can rise up towards the first resistance at 158.28. Right? Okay. Now let's move on to Bitcoin right now. Let's switch on over to crypto. We'll touch on Bitcoin, Ethereum, then moving on to the commodities, gold and crude oil. Right. Okay, so looking at Bitcoin, right, once again, I'm on a daily time frame. We can see Bitcoin making a bearish breakout through the pivot, right? This level here, which is at 100,018, right, was a pretty decent support level, right? Why do I say that? Right, we can see Bitcoin finding support or stabilizing above 100,000 several times, right? A couple of times here on 20th and 21st of Jan. Then we see it stabilizing as well above around this level on Monday 27th of Jan till Wednesday the 29th. So you can see this level here function as pretty decent support since 20th of Jan. But however, it looks to be giving way today, Sunday 2nd of February, right? We see a nice bearish breakout taking place, and if this breakout can gain further traction, I think where Bitcoin could stabilize is at this overlap level at 91,742, which has been identified as the first support. Now this is an overlap level because we see resistance being formed here in mid-November. Then we see a nice swing low bounce taking place here on 26th of November, another bounce here taking place on 6th of December, and of course we can see another swing low here on 30th of December, a couple of bounces here as well before that around Christmas, and almost like a double bottom here as well, which is in the second week of January. So you can see very clearly this is a pretty significant overlap at 91,742, which we can identify as the first support. So take note for Bitcoin, right? We are looking at a potential bearish breakout in progress, and of course if this breakout gains further traction, right, we can identify a take profit target close to the first support, right, which is at around 91,742. This is an overlap support level, right? Then let's take a quick look at Ethereum as well. It's making a bearish breakout through its own pivot, right? The pivot for Ethereum is at 3,056. This level was a pretty decent support level for Ethereum since third week of November, right? We see support after the breakout took place, right? There's a big gap here. Sorry, apologies. The big gap here that occurred on Sunday, 10th of November, and then Ethereum stabilized around this level, around 30,070 in mid-November, and you can argue here it found support on 20th of December, 13th of Jan, and of course as recently as 29th of Jan. So this was a pretty decent support level for Ethereum, which has finally given way, and we are looking at a bearish breakout currently in progress. Now this bearish breakout, should it gain further traction, did I mention, sorry, resistance, okay, sorry, resistance for Bitcoin, right? Sorry, I covered the bearish breakout, the overlap support, I didn't cover the resistance, apologies. First resistance for Bitcoin is at $106,860, right? This is a multi-swing high resistance, the first swing high resistance took place on 17th of December, and the second one, right, being formed around 20th of Jan, right? So this is a very significant multi-swing high resistance for Bitcoin with the intraday all-time high. Take note, the intraday all-time high for Bitcoin was formed on Monday, 20th of Jan, right? And that's at $109,547. So take note, intraday all-time high for Bitcoin was formed on Monday, 20th of January, right? So coming back to Ethereum, as I mentioned, just like Bitcoin is making a bearish break through its pivot. The pivot was a strong support level at $33,056 and is falling strongly towards what I see is a pullback support level at $2,763. Right now, this pullback support level is also accompanied by a Fibonacci retracement at 61.8%. So we found this retracement beginning from this swing low here, 5th of August, going up to the swing high on the 16th of December. We can see that the 61.8% retracement sits quite close to the pullback support at $2,763. So that's how we've identified the first support zone, right? So this bearish breakout has broken through very cleanly, right? And any short positions, right? If you have any short positions on Ethereum, right, you should be looking to identify a suitable take profit target at around the 61.8% Fibonacci projection. So basically at around $2,850 is where you can start to look at a potential take profit target if you've gone short on Ethereum, right? Similar to Bitcoin as well, right? With this bearish breakout gaining traction, right? Identifying your take profit target close to the first support, perhaps at around 92,000 or close or thereabouts, would be a suitable area to identify a take profit target for the short trade for Bitcoin as well. All right, now let's move on over to the commodities, starting with spot gold. And we can see that spot gold has been trading in a nice bullish channel since 30th of December, and at the same time, of course, we see it surpassing its previous all-time high, right? The previous all-time high for spot gold was formed on 31st of December last year, and that was at around $2,790 per ounce, right? So this was where the previous all-time high was formed. It tested this level about 2 Fridays ago, right? Friday 24th of January, 2 Fridays ago, it tested this level once more, but it failed to break above it. However, we saw a very clean bullish breakout take place on Thursday, and Friday we saw momentum push spot gold prices as high as $2,817 per ounce. So take note, intraday all-time high for spot gold was formed last Friday, 31st of Jan, and that level is at $2,817. Now, with this bullish breakout taking place last week, right, the pivot at $2,787 is identified as a pullback support. So let's zoom in a little bit here, right? So the pivot level is identified as a pullback support, right? We see a swing high resistance taking place here on 31st of October, and we see a small swing high resistance taking place on 24th of January as well. And with the bullish breakout occurring on Thursday, 30th of Jan, what was previously a multi-swing high resistance can potentially function as a pullback support. So we have a combination of the pivot, which is a pullback support at 2,787, and the bullish channel identifying a strong support zone for spot gold. So take note, we can see here spot gold has bounced off the lower trend line of this bullish channel several times, right? We can see it very clearly, 31st of December, 6th of Jan, 13th of Jan, 20th of Jan, and of course 28th of Jan as well. So you can see a very clean bullish channel, and the combination of the pivot and the lower trend line of the bullish channel has helped us identify a strong support zone. So any pullback, right, should it stabilize within this region here, right, within this zone here, right, and especially if it manages to stay above the bullish the lower trend line of the bullish channel, is very likely we're going to see this precious metal continue to climb higher. And if it does climb higher, right, the next resistance for spot gold is likely to be at $2,850 per ounce. This level is identified by Fibonacci extension at 127%. Take note, right? Remember, intraday all-time high, right? Intraday all-time high for spot gold was formed last Friday at $2,870 per ounce. We have no other level that we can reference to identify the next resistance, right? There's no swing high resistance or overlap that we can reference. So in such a scenario, we have to rely on Fibonacci extensions and projections. In this case, we've relied on an extension, and that extension was found by running a retracement from this swing high on 31st of October, going down to the swing low on 14th of November. So that's how we found this extension at 127%, which has been identified as the first resistance. Now pivot, as I mentioned, is a pullback support. The bullish channel here identifies a strong support zone, and below that, right, the first support is actually a nice overlap level. You can see previously support being formed here on 23rd of October. Then we see resistance here on first week of November. We see a swing high resistance in the third week of November or final week of November, and we see another swing high resistance in mid-December as well, and a little bit of resistance here in mid-Jan. So this creates a very significant overlap level, which we can identify as the first support, and it's also accompanied by a Fibonacci retracement at 38.2%. Now this retracement was found starting from this swing low here on 18th of December, going up to the intraday all-time high on Friday 31st of Jan. So that's how we found this 38% retracement, which sits pretty close to the overlap support at 2,715. Right, so these are the key levels here for spot gold, right? It looks to be extending, this bullish channel looks to be extending further, and especially if this lower trend line of the bullish channel continues to hold, right, the uptrend is likely to continue, and probably we can see another attempt towards the intraday all-time high, and that's at $2,817 per ounce. Now let's move on over to crude oil, right? XTI USD is the instrument that tracks WTI crude oil futures, and we can see a very strong downtrend for crude oil, right? If you look at it on a weekly basis, right, this was a very strong reversal over the span of 2 weeks, right? Previously we saw Bitcoin, not Bitcoin, crude oil, WTI oil, rise very strongly from the last week of December. This was primarily due to newly imposed sanctions on Russia's crude oil and gas exports that was announced by the outgoing Biden administration, right? So as President Donald Trump's inauguration took place on January the 20th, but before that the Biden administration was still in charge, and as they wrapped up their tenure, right, they announced newly imposed sanctions on Russia's oil and gas exports, which caused a strong breakout in crude oil, right? So there was strong demand, right, huge demand for crude oil at the end of December and beginning of January due to those newly announced sanctions, which caused crude oil, right, to break beyond $73 per barrel, rising as high as $81 per barrel. But since then, crude prices topped out, and as President Trump came into office, right, on Monday 20th of January, he announced a new energy plan where they're going to expand oil and gas production in the US, which caused crude prices to pull back sharply, right? So what was a very strong bullish move to the upside, right? We actually saw crude prices rise very strongly, right? If you look at it from here, from the final week of December till mid-January, crude prices rocketed almost 15%, right? Very strong bullish move to the upside. And at the same time, after that, after surging nearly 15%, prices have reversed sharply as well, right? From the peak to trough here, it dropped almost just over 9.9%. So very strong bearish reversal by crude oil. Now coming back to the daily time frame, right? So we've seen crude oil prices stabilize at around $73.50, right? We see this stabilize around this level in the final week of January, and looks to be retracing a little bit higher. Now I see a resistance, right? Like a pullback resistance at $76. This is where the pivot has been identified, right? We can see crude oil running the resistance here in mid-October, and then after that some consolidation here as well in the third week of Jan, right? Or the final week of Jan. So this creates a pretty decent resistance that's also accompanied by a Fibonacci retracement at 38.2%. Now this retracement, right, was found starting from this swing high on 15th of Jan, going down to the swing low of last Friday, the 31st, and we can see the 38% retracement aligning well with the pivot, as well as the 61.8% retracement aligning well with the first resistance. So take note, the pivot is like a pullback resistance level accompanied by 38.2% Fibonacci retracement. I think this is where crude prices could stall once again at around $76 per barrel and make a bearish reversal to drop lower. Beyond that, right, beyond the pivot, the next resistance comes in at around $78.08 per barrel, right? This is like a multi-swing high resistance, or almost like an overlap, right? Why do I say that? Because we see a swing high resistance being formed here on 27th of August, another swing high being formed on 8th of October. Then I see support here for a couple of days, right, on 14th and 15th of Jan. So this creates a pretty decent overlap level at $78.08, which is also accompanied by Fibonacci retracement at 61.8%. And in terms of support, right, I see a very significant overlap at $72.43, right? We can see here a nice swing low being formed on 5th of August, another swing low being formed here on 22nd of August, and then once the bearish breakout took place in the first week of September, we then see this level functioning as resistance towards the end of September, support here as well, 9th of October, resistance once more on 24th October and 6th November. So we can see very clearly a very significant overlap level, which we can identify as the first support. That's at $72.43. And this level is also accompanied by a Fibonacci retracement at 61.8%. We found this retracement level starting from this swing low on 6th of December, going up to the swing high on the 15th of Jan. Right, so take note, all crude oil prices have fallen sharply over the last 2 weeks. It looks to have stabilized towards the end of the final week of January, right, and looks to be retracing higher. However, I think any retracement to the upside could stall at the pivot, which is at around $76 per barrel. All right, hi Nick. Oh yeah, of course. Cheers, Nick. Thanks for reminding everyone to smash the like button, right? And also, I'm going to be running a poll as well shortly. Do respond to the poll as well. Truly appreciate it if you guys can give your feedback with regards to that as well. All right, thanks so much, Nick. All right, so this is crude oil, right? Remember, XTI USD is an instrument that tracks WTI crude oil futures. All right, okay, so with that, we've covered crypto, the dollar index, a few of the major currency pairs. We've covered the commodities such as gold and oil. Let's move on over to the indices, right? We'll start with DAX. The 40 is the instrument that tracks the DAX futures. And of course, if you have any other requests, please do drop them in the chat box here, and I'll be more than happy to go through the analysis with you, right? Do not wait till the end of the session. Do drop your requests in as soon as possible, so we have time to go through the analysis together. All right, so looking at DAX, once again, DE40 is the instrument that tracks the DAX futures. And we can see here DAX has made an intraday all-time high last Friday, 31st of Jan, and that level is at 21,802, right? We can see it breaking past several resistances, right? If you look at it on, let's just take a quick look on the weekly time frame, right? We can see that there was a nice swing high resistance that was formed in the third week of October. That was at around 19,650, and that level gave way, right, on 2nd of December, right, on the first week of December, with the DAX making a bullish break above a prior swing high resistance, and then stalling at around 2,480, right, making a swing high resistance here. And this of course got taken out as well in mid-January as well. A very strong bullish breakout has occurred in mid-Jan as well. Now coming back to the daily time frame, previous breakout levels or resistance levels can now proceed to function as support, right? So you can see here this was a pretty decent resistance that had been formed on 24th of Jan, and with price breaking higher on the 29th, this level here at $21,471, sorry, $21,471, sorry, this is an index, is likely to function as a pullback support, right? With DAX pulling back today, or pulling back last Friday. If this pullback extends even further, it's likely to find support at the combination of the pullback level, which is the pivot, and the 23.6% Fibonacci retracement. Now this retracement was found starting from this swing low on 20th of December, going up to the swing high here, right, the intraday all-time high on 31st of Jan. So that's how the pivot has been identified. It's a pullback support that's accompanied by Fibonacci retracement at 23.6%. Now, beyond that, the first support is at around 21,000. It's accompanied by Fibonacci retracement at 38.2%. Right, on the daily time frame here, it doesn't look like much, but if you look at it on the 4-hour time frame, it's actually a period of consolidation as well. Right, you can see the DAX consolidating around this level here, around 31,000 from 17th of Jan till about the 21st of January. So about a period of 3 to 4 days, right, it's consolidating around this level before breaking higher. So this is where I see another potential support area for the DAX, which has been identified as the first support and is also accompanied by a Fibonacci retracement at 38.2%. Now, with the DAX making an intraday all-time high on Friday, the 31st of Jan, remember we have no other levels to reference. There's no other swing high or overlap or pullback that we can reference to identify the first resistance. So in this case, we are using a Fibonacci projection. Now this projection level was found starting from point 1, 5th of August, going up to point 2, 16th of December, coming down to point 3 on 20th of December. So that's how we found the 78.6% projection at 22,397, which has been identified as the first resistance. And I would also probably like to maybe highlight a pretty decent bullish ascending trend line as well. There's a pretty decent ascending trend line for the DAX, right? You can see here bouncing off this trend line on 13th of Jan, 15th of Jan, and then again on 27th of Jan. Pretty decent ascending trend line. So take note, the combination of the ascending trend line, the pivot, and 23.6% Fibonacci retracement could help us identify a nice support zone for the DAX, thereby identifying a potential entry point if we see a bullish reversal take place or bullish bounce materialize. Alright, so that's for the DAX. And let me see, and if anything else, right, maybe I would just highlight this slightly longer term descending trend line, right? There's a very nice longer term descending trend line that has begun from August, first week of August 2024, right? This descending trend line here from August, right, is a much more significant trend line, right? We can see the DAX bouncing off this level, this trend line several times in the second and third week of November, and then again in the final week of December as well. Right, then let's move on over to US 500. Right, okay, there's a request for the Euro Franc and Euro Pound, right? Great, we'll cover that after the US 500. Now US 500 is is the instrument that tracks the S&P 500 futures, and we can see that this index here has made an intraday high on Friday, 24th of Jan. The intraday all-time high sits at 6,137. It made an attempt to breach this level last Friday, but it pulled back quite sharply. It's falling towards now. It's falling towards what I see somewhat of an overlap support, right, at 5,979, which has been identified as the pivot. Now this level here, right, the pivot previously functioned as resistance in 6th of Jan, right, and then proceeded to function as pretty decent support here in the final week of January. So this creates a pretty significant overlap level at 5,979, which we can identify as the pivot, and is also accompanied by Fibonacci retracement at 38.2%. Now, this retracement level was found starting from this swing low, 13th of Jan, going up to the intraday all-time high on Friday, 24th of Jan, right? Now, in terms of first resistance, very clearly it's going to be close to where the swing intraday all-time high was formed, right? The first swing high taking place here on 24th of Jan, and resistance once more last Friday. So quite clearly, first resistance is at around 6,113. Now, beyond the pivot, which is an overlap support, I see another multi-swing low support at 5,818, which has been identified as the first support, right? We can see the first swing low. Oops, hang on, where's my brush? Right, we can see the first swing low being formed here on 20th of December. We can even argue here the second swing low takes place on 2nd of Jan, and of course the third swing low taking place here in mid-January. So a pretty significant support level, which has been identified as the first support. It's a multi-swing low level at 5,813. All right, before we move on to the requests on Euro franc and Euro pound, I'm going to launch a poll as well. Truly appreciate it if you guys can give your feedback with regards to today's webinar, and then of course we'll continue the session with the final requests. Alright, just launch the poll as well. Right, please do remember to respond to this poll as well as smashing the like button. Truly appreciate it, guys. Alright, okay, we'll cover Euro franc, Euro pound. And right, there's a question on the tariffs as well. Will the tariffs on China and Mexico impact crude oil, and why? Okay, I think it's not going to be. There will be some impact on crude oil prices due to the tariffs as well, particularly on more on China and Canada, right? China and Canada, because China being one of the, or rather, China is the world's largest importer of crude oil, and Canada is a strong producer as well, producing nation as well. So the imports or the tariffs on Mexico and Canada could have an impact on the price of crude oil. But what I think is going to have a much larger impact at the present moment would be the expansion of oil and gas production in the US, right? Donald Trump really looks to be looks to have a lot of drive towards making the United States as energy independent as possible, and they're going to do that by expanding oil and gas production in the US as widely as possible. So I think the more downward pressure is likely to come from the expansion of oil and gas production in the US over the medium to longer term. But at the same time, right, we can also expect the tariffs on Mexico and China, and of course the upcoming OPEC meeting on Monday, right, to have near-term impacts as well, right? Any changes in production levels or voluntary production cuts by OPEC and OPEC plus members could have huge impact in the near term as well. But over the medium to longer term, I think if the oil and gas expansion of oil and gas production in the US really takes off, that's really going to have a larger impact on crude oil prices, and that means crude oil could be limited as well. Prices could be restricted. All right. Okay. Right. Great to see all the responses come in as well. All right. Let's continue with the dollar franc, right? Oh, sorry, not dollar franc. Euro franc, right? There we go. Marondera wanted Euro franc, Euro pound. Let's cover Euro pound first. Okay, so looking at Euro pound, right? We can see that it has run into resistance in mid-Jan at around 84.50 and has reversed quite sharply, right? And looks to be falling towards what I see is a pullback support level at 83.25. So once again, this is the Euro pound on the daily time frame, right? We see the pound really appreciate versus the euro, and is falling towards what I see is a pullback support, right? we can see here there's a support level being formed in mid-December, and then 27th December creating a pretty decent pullback level at 83.25, which is also accompanied by Fibonacci retracement at 61.8%. Now this 61.8% retracement was found starting from this swing low on 19th of December, going up to the swing high here on the 20th of Jan. So euro pound looks to be falling or sliding towards the pivot, a pullback support level. So if you're short on the euro pound, right, identifying your take profit target close to 83.30, right, or 83.30 or thereabouts would be a suitable area to do so. Now beyond the pivot, which is the pullback support, there's a multi swing low support at 82.24, the first swing low taking place on 10th of December, and then the second swing low taking place on the 19th of December. So this is a very strong or significant multi swing low that was formed in December, and that's how the first support has been identified. Now first resistance looks to be in sort of no man's land, but if you look at it on the 4-hour time frame, right, there's actually a pretty decent overlap level, right? If you look at it, there's actually a pretty decent overlap level at around 83.93. This is an overlap resistance where we can see euro pound reacting off this level several times since 9th of Jan. Now if we also run a Fibonacci retracement from this swing high here on 20th of Jan down to the swing low, which is the low here on 31st of Jan, I believe there's a Fibonacci retracement that we can use as well, right? We can see that the 38.2% retracement sits pretty close to the first resistance, which is an overlap, right? Once again, on the daily time frame, it doesn't look like much of a level, but once you zoom in on the 4-hour time frame, you can see 83.93 is actually a pretty decent overlap resistance that's accompanied by a Fibonacci retracement at 38.2%. Right, so take note, euro pound has slid lower since the third week of Jan, and this downward momentum could continue all the way down towards the pivot at 83.20, which is a pullback support accompanied by a Fibonacci retracement at 61.8%. Alright, okay, now the final one is euro franc. Let me see, do I have it on my short list? No, alright, let's search for this. Right, so here we are, euro franc. So this currency pair has been in a strong, pretty decent upward trend since the third week of November last year, right, with the Swiss National Bank making successive rate cuts, right. Along the way, the Swiss franc has weakened quite considerably, and that has caused euro franc to rise as much as, let's see how much has it risen, as much as 3.4% from trough to peak, right, since the third week of November 2024, right, from its lowest point to the high of 2025, right, this is the 2025 high. Euro franc has gained about 3.4%. Now it has run into resistance here, right. This is actually a very clear swing high resistance, right. The first swing high resistance taking place in September of 2024, and this is where once again euro franc has stalled last Friday. So as the euro franc was rising up strongly, right, in the third and fourth week of January, right, I would have identified this region here, right, as a major resistance at 94.90 or pretty much at around 95, right. This is where I would have identified the first resistance, which also would have functioned as a take profit target for any long euro franc trades. But for now, right, it has reacted off this level, so this is how we can identify the first resistance. It's a multi-swing high resistance here, and maybe there's a Fibonacci retracement that we can use as well, starting from this swing high, 15th of July, lowest point is here, right, and let's take a look at all the fibs. We can see that, okay, the 50% retracement sits pretty close, but of course with this candle breaking above the 50% retracement on Friday 24th of Jan, right, we can't use this retracement anymore. That's fine. Remember, don't force the Fibonacci analysis or Fibonacci levels onto the analysis if they are no longer valid. Now on this uptrend here, we can also run a Fibonacci retracement starting from this swing low 22nd of Jan going up to the swing high on the 24th of Jan. When I look at the 38.2% retracement, I see a pretty decent pullback level at 94.02, which I'm going to be identifying as the pivot. Right, with prices pulling back towards this pullback level, we could potentially see euro franc stabilize around the pivot and make a bullish bounce. So we're looking for a potential bullish bounce for the euro franc. Right, so remember 94.02 is a pullback support level that's accompanied by Fibonacci retracement at 38.2%. Now slightly below, right, I see a pretty decent overlap. Right, I see a pretty decent overlap at 93.24. This is where I would identify the first support, and it's also accompanied by Fibonacci retracement at 61.8%. So let's keep 38 and 61 in our analysis and just tidy up a little bit. Maybe make the labels a bit more visible. Let's see what would help. Yeah, but this is a little bit better, right? Okay, there we go. So after running the resistance on Friday 24th of Jan at around 95.08, euro franc looks to be pulling back and is falling towards a pullback support at 94.02, which is accompanied by a Fibonacci retracement at 38.2%. All right, thanks everyone. That's all I've got for you guys today, right? Once again, thanks for tuning in to the pre-market session brought to you by IC Markets. And also take note that it's US labor market week as well, and we have the Bank of England coming up on Thursday. So we have the ADP employment report out on Wednesday 5th of February, and on Friday we have the BLS employment report, which will highlight the non-farm payrolls and the unemployment rate that's out on Friday 7th of February. And sandwiched in between, we have a monetary policy announcement by the Bank of England, where they are expected to make a 25 basis point reduction in the official bank rate. Right, it currently stands at 4.75%, and they're looking to make a 25 basis point reduction. Jobs data is going to be in focus as well, particularly for the ADP employment report, which tracks private payroll growth in the US, and we have seen payroll growth as reported by the ADP slow for 2 consecutive months. However, we're looking at a pretty decent rebound for this January, with job growth rising to 149,000. And when we look at non-farm payrolls, it has rebounded strongly in November and December, but we're looking at a slightly slower rate of growth for January, with only 154,000 jobs being added, expected to be added to the economy, below the 12-month average, as well as being lower than November's and December's figures as well. So take note, right? We could see huge volatility for markets this week as well, especially during the Bank of England announcement, as well as during the release of the BLS employment report. All right, thanks everyone for tuning in to today's session. Do look out for all upcoming webinars brought to you by IC Markets for the rest of this week. Right, we've got live analysis and educational webinars coming up in English, Bahasa, and Thai as well. All right, thanks everyone. Have a great trading week, and catch you all in the next session.